In today's video, I am going to talk to you about the benefits of an LLC. Specifically, I'm going to talk to you about the flexibility an LLC offers. So you probably clicked on this video because you want to learn how an LLC can provide you and your business with flexibility. Hi, my name is Andrew. I'm from Mulai Law, where we help entrepreneurs just like you start your businesses without dealing with the complicated legal forms. Our done-for-you service is backed by over 2,044 five-star Google reviews, and we can help you start your business too. Let's go ahead and talk about how an LLC can provide your business with flexibility. It is important to note that there are no ownership restrictions. Back in the day, if you wanted liability protection and a form of pass-through taxation, you were resigned to forming an S corporation. S corporations are just basic corporations with a special tax election that you can file with the IRS. Unfortunately, they also come with severe limitations as to the number and types of owners the business may have. For example, S corporations are limited to 100 or fewer owners or shareholders, and these owners cannot be other companies or non-US citizens. Additionally, they can have only one class of ownership, meaning that all owners must be treated equally. LLCs, on the other hand, have no such problems. You can issue as many shares as you want to any other entity or individual of any nationality. However, as individual as your pets may be, don't count on that. You can also structure the ownership however you like using membership classes. You can give preference to certain owners when it comes to profit distributions, or you can allow some owners certain voting rights that others don't get. LLCs also offer a lot of leeway as to how individual ownership is structured. For example, each member can be subject to his own buy-sell agreement that dictates the rules and restrictions on his individual membership interests, including what should happen to that member's interests should he pass away or get a divorce. These rules can vary from member to member if you so choose. The first reason is no ownership restriction. The second reason is no management restriction. When it comes to the management of the business, an LLC can be managed by its members. When you select member management for your LLC, all of the business's members have an equal say in the day-to-day operations, no matter their ownership percentage, unless you state otherwise in the operating agreement. They all have an equal right to sign contracts and enter into debts on behalf of the business. If you don't want one of your members to have this sort of power, then member management is definitely not for you. LLCs provide for separate managers. These folks may or may not hold a stake in the company. Most companies that have more than 2 or 3 operating members choose manager management. When you elect manager management, you can have as many of your members be managers as you want. However, not all of them have to be managers if you don't want them to be. For example, say you are raising money for your new enterprise. Although you want your investors to profit from the business's success, you don't want them to have a say in the day-to-day operations. To achieve this, you form a manager-managed LLC and elect yourself as the only manager. As members without management authority, the investors have limited say in the day-to-day operations of the business. This is a really good strategy for creative projects like movies, as a way to keep the investors from running wild on the set. This is a really good strategy for creative projects like movies, as a way to keep the investors from running wild on the set. When establishing your LLC, you state in your articles of organization whether your company will be designated member managed or manager managed. Most states give you heaps of leeway in prescribing exactly how your company is managed. You can create multiple management groups and multiple management roles. You can also restrict some non-managing members from voting or having any say whatsoever, including who is chosen to manage the company. All these types of details are up to your discretion and simply need to be laid out in the LLC's operating agreement. The fact that you can specify separate managers as a trademark of LLCs that helps separate them from other entities such as sole proprietorships and general partnerships. In a general partnership, all the members are owners and all are equally and personally liable for the business. A limited partnership can have members who also manage the business. However, it doesn't have any sort of limited liability protection. LLCs offer several advantages over corporate business structures. While C corporations offer limited liability protection, these profits are subject to double taxation, once at the corporate level and again at the individual level as dividends. S corporations offer limited liability with pass-through single taxation. However, S corporations are also subject to a number of restrictions, including the number and types of owners allowed. By contrast, LLCs offer limited liability and pass-through taxation with fewer restrictions. For example, unlike S corporations, LLCs can own stock in affiliated corporations. Like a corporate shareholder, an LLC member's liability is limited to the amount of his or her capital contributions. A member is not likely to be liable for another member's personal liabilities or liabilities arising from his or her acts relating to the LLC. But be aware that as an LLC member, you still are liable for your own individual wrongs, such as torts, malpractice, personal guarantees, various state or federal tax liabilities, and regulatory violations. Much like the asset protection of a limited partnership, an LLC interest is considered personal property. The only remedy available to a member's creditor is charging order. A charging order acts as a lien against a member's interest. It allows a creditor to be assigned the economic benefits the member would normally enjoy, but it does not give a creditor the right to underlying LLC assets. Nor can a charging order force the sale of a member's interest to satisfy an outstanding debt. The LLC assets remain intact. To sum it all up, the flexibility an LLC provides is 1. There's no restrictions as to ownership. 2. There are no restrictions as to management. And 3. LLCs offer certain options that S corporations and C corporations fail to provide. If you happen to have any questions about anything that I talked about today, please make sure you click the link in the description box below to book your free consultation with a professional that can provide you with more information as to how an LLC's flexibility will benefit your business. If you haven't already, please make sure you hit the like and subscribe button so you don't miss out on any future videos. It's time to invest in yourself. It's time to rise.